I think they know that they need to have a higher Bitcoin price to help them because stable coins, which are a small piece of the overall Bitcoin network today, not insignificant, but smaller, are big buyers of treasury bills. And guess what? The U.S. has a lot of treasury bills to sell. And so if the Bitcoin price goes higher and stablecoin market gets bigger, and then those stablecoins need to buy treasury bills, well, that's all good for the U.S. government. So, the world is kind of turning risk off on the overall stock market because the economy appears to be rolling over, and all these tariffs and all the things Trump has made it clear he's going to disrupt things, he's going to break things, as necessary. And one could argue that he's trying to break the stock market in order to help the bond market because they've got a lot of debt to roll over, and it's a problem.
Today we have Larry Lepard and Tom Lee giving their Bitcoin price prediction and crypto market outlook after the giant sell-off and manipulation we're seeing in the crypto market and where we're headed in the coming weeks. Lepard and Tom Lee believe this is only the beginning. As people become more aware of the dollar's depreciation, they'll gravitate toward assets like Bitcoin, not only because of its store of value, but its scarcity and limited supply of 21 million coins. Lepard says this will be central to Bitcoin's long-term price increase, and while he acknowledges that Bitcoin's journey will be volatile, its success is a certainty. He predicts Bitcoin will far surpass $100,000 in the coming months. And because of the ETF and institutional adoption, it makes a clear path to 10 million per coin. Governments have attempted to slow down Bitcoin's progress by making it more difficult to enter and exit crypto markets. But despite these challenges, Lepard believes this actually demonstrates Bitcoin's lasting presence and solidifies its position as the currency of the future. Let's get right into the interview with Larry Lepard and Tom Lee as they give their Bitcoin prediction and crypto market outlook in 2025.
Bitcoin is much more volatile, and history shows when it does go on these runs, that you get some FOMO, and it can go for quite a while. I mean, particularly if something happens to the stock market. I mean, for those of us who are market historians and have looked at the market, valuation wise, I mean, it's hard to overemphasize how extremely overvalued this is. This is like in the top 1% of valuations ever. It's more overvalued than 29. It's more overvalued than 2000. I mean, there's a lot of good analytical work out there that just shows that the free money that we had, the ZERP and the low interest rates that we have blown an enormous stock market bubble. And if nothing goes wrong, valuations can stay stretched for a long period of time. But if something goes wrong, the stock market turns. A lot of people are in the stock market. Everyone bases their economic spending patterns on how the stock market is doing. And for some reason, for whatever reason, heaven forbid, the stock market turns, it's going to make this entire situation. It's going to turn it into a mess. The more important thing to me that I found so interesting was just how strong and persistent the breakout was. And for those who've been following it, Bitcoin had kind of been trading sideways for quite some time. And there was a joke on Twitter about the 58K club, and 58K was the bottom, and kind of high 60s, low 70s was the top. And I always sensed that when it did break through the 72, 73 area, it was going to squirt higher. And boy, it sure did. It went from, it kind of straight lined from 70 something to 99, as you know. Wouldn't surprise me at all if it cooled off, but it also wouldn't surprise me if it continued. Bitcoin is much more volatile, and history shows when it does go on these runs, you get some FOMO, and it can go for quite a while. I mean, my ultimate target on this cycle, and I measure the cycles in kind of 4-year terms, which a lot of people do, kind of based on the halving. My target for this cycle, the top is closer to 200, maybe a tad above it. So we're not, we're halfway there, a little under halfway there. But obviously today it's getting hammered, and it wouldn't, it's not unusual either for things to break out to go back and test the breakout point. So I think I'd be very surprised if it went below 73. I'd actually be surprised if it went back to 73, but could it retrace a bit of the recent gains? Sure, it could. A lot of it depends on how many of the buyers in the last, month or so have been doing so on leverage and have been doing so with speculation. When they suddenly realize that 110 isn't imminent, and they get scared, they're going to bail. And so we'll have to go back to 90 to build a new base at 90 or something. I don't know. That's just a thought. I mean, it's very hard to tell. And I never trade it, I never sell it. I just have my Bitcoin, and that's that. I view it as a long-term, store of value, very much the way I view the gold that I own as a long-term store of value.
When you say 200,000 as a cycle top, when did this cycle start for you?
It kind of started in the when it was kind of trading around 50. I mean, the bottom was
Mm,
15, as you know, after FTX, but it kind of
yes.
based for a number of years around 50-ish, 50, 58. I don't have
Okay.
a chart right in front of me, but and the history of these cycles is they tend to go to, four, five, six times, the base. So that would imply that we could get to, 160, 200, maybe even high as 250 or 300. I don't know. Then it would be quite extended above its 200-day moving average, and it would be quite extended above the power law model, which I think has validity because backtesting the power law model has described 97% of the movements. So it's the thing I think people have to keep in mind is that it's a volatile asset with a strong bias upward. And I've always recommended people have a little bit of it, or the only wrong allocation is zero, and you should dollar cost average on your Bitcoin purchases. I mean, I was buying it at 15, buying it at 30, was buying it at 50, was buying it at 70. When I get some more money, I'll buy it at 90.
The ongoing adoption of Bitcoin by governments, institutions, and media signifies a broader recognition of its value. Comparing the initial years to the current widespread interest and investment, with a giant spotlight on Bitcoin ETFs. He also suggests that BlackRock, under the guidance of Larry Fink, will lead the charge in adoption. This move, he contends, will underscore Bitcoin's enduring relevance as an asset and its potential as a hedge against currency devaluation.
Okay, so basically it'll 4x from its bottom in the next cycle. What's your thesis there?
Because that's if you go back and you look at prior cycles, that's kind of what's happened. In earlier cycles, it was actually more than 4x. And it's not just the X, it's kind of the standard deviations off the base. This is the power law model. But there were some of the earlier cycles you actually got like 9x off the bottom or off the base. But it's, with each as it grows up, as more people
Yeah.
hold it, as it gets more widely distributed, you see that the ups aren't as bad and the downs aren't as high and the downs aren't as low. The first drawdown I think was 90 some odd percent. More recent drawdown, last drawdown I think was 70-ish, and I expect these drawdowns to move to the 60s and 50s and 40s. I mean, over time, as it gets more widely distributed. These guys are thinking correctly and cutting expenses. They're thinking correctly about that. But the point I would make there is that, we spent 6.75 trillion last fiscal year ended September. 80% of that is Social Security, Medicare, interest, and defense. So, when they talk about taking a hatchet to government and cutting government, unless you're going to touch those four areas, it's going to be hard to cut. So the remaining 20%, even if you take 30% off that, that's $270 billion a year. The deficit last year was 1.8 trillion. The run rate on the deficit this year is 2.4. So, the deficit's a real problem, and the debt growth is a real problem. So they're going to have their hands full.
It's a real problem for, I guess, the economy overall, but could it be a boon for certain assets?
It could be. It could be indeed, especially if they end up going to yield curve control and printing money to address it. And I think that's what's going to happen. It's obviously today isn't reflecting that because gold's down $80 and Bitcoin's soft and so forth. But, what I've been maintaining up until today, and I still do longer term, is that we're in a sovereign debt crisis. The fiscal situation is out of control. And you're really seeing this when you compare, the last 3-year performance of Bitcoin or gold to debt. And I just did some charts on this, which are on my Twitter feed for this New Orleans conference. In gold terms, compared to the bond, the gold's up 170%, in 3 years, and Bitcoin's up 3,000% in 3 years. And what this tells you is that the bond market is, in my opinion, in the process of failing. I mean, one thing that's interesting, as I know, is that they cut interest rates, the Fed cut interest rates, and yet, the 10-year has gone up 75 basis points. So that's not supposed to happen. And it tells you that the Fed is probably too loose. And yet, because they are, the ones setting the short-term rate, and Janet's using the short-term market to fund a lot of the debt that's rolling over, they're under a lot of pressure to keep cutting rates, in an effort to, make the U.S. funding costs not go up, because interest expenses running at a $1.2 trillion rate. They certainly don't need that to get worse. They've got a lot of things they'll do, though. I mean, Becente's got an interesting trick up his sleeve. He's talked about maybe, Powell's term doesn't expire until early 2026. And Becente's talked about maybe appointing his successor, but, announcing who his successor was going to be beforehand and letting that guy give speeches. And so, in a sense, it'd be 1 year out forward guidance. It's an interesting concept. The Fed and the Treasury are going to, quote unquote, have their hands full, in my opinion, in the next 6 months.
Why do you say overreaction?
Well, yesterday really was an indiscriminate selling day. Did Tesla's valuation and fundamentals drop 15%? Did the broad market have a 4% decline in valuations? To us, it really looked like a lot of liquidation. I think investors are, of course, reacting to the White House warning of pain ahead, but it has been more of an equity sell-off than it has been in corporate bonds. So to us, 4% down days, yeah, I think it's an overreaction. I think on the stock side, markets are now saying, look, the new regime is we have to take the tariffs seriously. Now we don't know how long these tariffs might be. Will it hurt growth? And we've seen cuts from economists. But the bond market is saying, well, you know what? This is a growth scare. But the Fed is also now in a position to begin cutting because inflation pressures are abating. So I think the bond market is sort of pricing in a Fed put. The stock market saying, I'm not sure if there's a White House put, and then the Fed's on hold, and I think that's the divergence. I think the Fed put, in fact, is probably coming back because the odds of a May cut have been inching up. They hit 54% yesterday. And, in fact, total cuts hit 3.5 cuts, which is now 2.5 or 1.5 more than the Fed's guided. But I think that the Trump put exists. I mean, I know they've explicitly said there isn't one, but look at yesterday. Tesla's down 15%, and on Truth Social, Donald Trump talks about Tesla. So I think a put exists. We just don't know the level when the White House intervenes. And then today's the Business Roundtable. We'll find out. And for a while, markets ignored those tariff headlines, and now they're taking it very seriously. But I think at the end of the day, if we take every headline at face value, then markets are completely paralyzed. And of course, that again creates opportunity because at some level, all these stocks are really attractive opportunities, especially something that's had a 50% drawdown.
He may have a bold price prediction of $200,000 in 2025 and then on to $1 million. But he's not the only one that shares this sentiment. Michael Saylor, Max Kaiser, and Cathie Wood all predict Bitcoin's price going from 6 figures next year and then on to hit 7 figures within the next 5 years. The halving is a key milestone for Bitcoin, as its price has historically multiplied times 10 every 4 years. We'll be keeping an eye on Bitcoin's price in the coming months. What do you think about Larry Lepard's and Tom Lee price prediction for Bitcoin and where crypto is headed in the last part of the year? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.